More often than not, W-2 employees are told they just do not have many options when it comes to tax mitigation. And that is true, especially the more that you make, the harder it is to implement these tax mitigation strategies. Now, you have real estate, you have maxing out your retirement accounts, and all those things are great. The problem with real estate is what if you can't find a deal or you don't want to become a landlord? The problem with your retirement accounts is, well, they just don't really move the needle that much. Maxing out your 401k, putting 23.5 into your 401k year after year is kind of like throwing a lawn chair off a cruise ship. If you're making 700 grand a year, taking a 23.5 deduction, sure, it's going to save you some money, but it's not going to cut your taxes in half. So this is the number one tax strategy that big earners never hear about, and it's the best option for W-2 employees who are tired of being told there's nothing else you can do and losing 30 to 50% of your income to taxes. It's not real estate. It has nothing to do with that. Now, like I mentioned, the tax code is not written for you. You've been told over and over that there's not many options. This is a phenomenal option. So, my favorite W-2 high income employee tax strategy is what's known as a tax equity investment. This is a strategy where an investor like yourself contributes capital to some type of thing, right? That usually qualifies for significant federal tax credits or deductions in exchange for a return that includes tax benefits, credits, deductions, losses, etc. So you realize your rate of return via tax savings. And this is why I'm so big on tax planning first before going out and chasing returns in the S&P 500 or wherever you chase returns. I don't manage money. I'm probably not ever going to manage money. I'm not against investing in the stock market, obviously, but you can beat those rate of returns by using tax planning instruments first. So, big picture here, this is not an expense, this is a discount. You have two options. You can pay full taxes, 30 to 50% of your income, or you can purchase strategy, pay discounted taxes, which is going to be about 5 to 10% of your income. Now, remember, the tax code is like an incentive manual. One of the main goals of Congress, and this is who actually writes the code, is to influence behavior. Doing good by others is something the code encourages, and as a result, can give people a tax break. So I'm going to walk you through what we call the medical LLC and see if it can actually help you do good by others and potentially, it's not guaranteed, it's always a potential, reduce your out-of-pocket tax liability. Okay, so before I give you the background on this, understand this strategy again has the potential to reduce your taxable income by up to 60%. Nothing's guaranteed, just like real estate's not guaranteed or the S&P 500 isn't guaranteed. But we've had thousands of high income earners use this strategy to save millions of dollars over the years. So the idea behind this product is that it's designed for first responders, firefighters, people in the military, armed forces, police officers, etc. Now it uses C60, which if you don't know what C60 is, carbon 60, it is made up of 60 carbon molecules, which is it's an anti-inflammatory, anti-free radical. So look at firefighters, for example. They tend to have higher levels of cancer rates because they breathe in a lot of carcinogens, a lot of smoke. So the purpose of this product is to be taken orally as a medication, and it's designed for first responders who, like I said, are frequently exposed to carcinogens because C60 is a medication that reduces oxidative stress and inflammation. It helps them, for the first responders, mitigate their risk of cancer, heart issues, etc. So, why do companies do this? Well, why would they sell their products at a discount? Why isn't that bad business? Well, not really, because these are new-ish products and newish companies that are trying to get into the medical distribution network. If you know anything about that network, it's very hard to penetrate. So they're using people like us in order to come and inject capital. They don't want to take on debt. They don't want to give up equity, but they want to get their name out there. So what they do is they sell their products at a discount. They collect the money, and then they can get their products into market for the medical industry to use. Now, because medication expires, so think about like I have this zinc, this isn't medication necessarily, but it's a supplement. Now, there's an expiration date on this. The expiration date on this is March of 2028. And the reason that these medications have expiration dates is because they lose their potency after a certain amount of time. There's a shelf life to it, right? So what we're doing here is we're going to hold the manufacturing rights. These are represented by digital gift cards, and if elected to donate, are considered a cash donation. Hence why you can reduce AGI by up to 60% because it's a cash donation or a cash-like donation. So here's how it works. 6 very, very simple steps. Number 1, you contribute cash to a special purpose series LLC. Number 2, the LLC receives manufacturing rights to the C60 supplement. Number 3, those rights are converted into gift cards. Number 4, you choose what to do with them. You can donate to a pre-approved charity, which is recommended for the most potential tax benefits. You can redeem them for cash, or you can keep the product. So it's not like you're, putting money in and automatically receiving a donation. No, you have a choice. It's going to be your decision. Now, if and when you donate, you receive a fair market value tax deduction. And that is key. That is a key factor in this entire process. And then finally, you receive all the supporting docs, and your CPA can validate the write-off with those. It is quite literally that simple. This is this is probably the most basic strategy that we use mainly with high-income W-2 employees, but it works with all big income earners, or it even just works with retirees doing Roth conversions. So if you sell your business, there's a lot of use cases for this strategy in particular. But like I said, this is just one basic strategy. If you're doing the 401ks and the retirement accounts, writing off mortgage interest, things like that, those are all great, but they will not move the needle as much as this. And if you saw my other video where I walk through exactly how tax planning stacks up from an ROI, return on investment, which is not necessarily an investment, I should say. But if you watch that video, you see how we can beat the S&P 500 by using tax planning first, and then you can take those savings and whatever you were going to contribute and go put it into the S&P or real estate or whatever you were going to put it into. So before and after medical LLC examples. So this first one was a couple in California making $481,000 per year W-2. Prior to using this strategy, they were paying $153 total out of pocket. Now they spend $60. They reduce their taxes down to $60, and which brings their total out of pocket to $120. And as a result, they save $33,000 in about 30 minutes or so. So they don't have to become a real estate professional or go find deals. Which, by the way, again, I want to really emphasize this because I'm not anti-stock market. I'm not anti-real estate. I love all those things. But what if you could put an extra $33,000 into your real estate or into your real estate portfolio or into the S&P 500 because you started with the tax planning? So that's first example. Second example, a couple in New York making $763,000 a year with a net savings of $42,608. This might actually go up at the time that I'm making this. It's July 1st, 2025. I don't know the guy's name, but apparently New York City just had a new mayor come into office or was elected. I'm not even sure if that's true. I've just seen and heard buzz on social media about this. So New York City residents making over, I believe it was $500,000 a year. I think I saw a video that said you're going to see a 50% increase in taxes. So these numbers could be higher. But again, with the current tax rates, that's what the savings would be for this strategy. And again, this is why I say it's a discount and not an expense, because we're using tax dollars to generate a net savings. And then finally, I know what you might be thinking of, hey, these are states with high income taxes. Does it work in a state with no income taxes? So let's look at the great state of Texas. Here's a couple making $1.25 million a year, and their net savings was $103,000. Okay, so who can use this strategy? Well, the biggest factor is you have to have a good heart. Okay, the biggest factor is those that want to support veterans, first responders, and actually make an impact on society. The result is a potential tax benefit. Now, the medical LLC is for high income earners. If it can work if you're at $250,000, $200,000. Really, we'd really need to run the numbers on that. You'll save some money. Maybe you'll put $5,000 back in your pocket, which, hey, $5,000 is $5,000. But ideally, we're looking for $500,000 plus annually. 350, 400, 450, yeah, it could work potentially. We're going to have to run the numbers. That's really what it's all about. And so the rule of thumb where I like to start is anyone who has a tax liability of $50,000 or more. So, hey, I appreciate you watching. Fly in my room. I appreciate you watching to the end of the video. If you're still here. Now, if you want this document right here, you can find it at the link below. Additionally, if you want to meet to see how much we can save you this year in taxes, we are in July right now, but we're coming up to, Q4. It's going to be here before you know it. And then everyone's going to be scrambling for tax strategy. And a lot of people are going to wait too long. These strategies are going to sell out, and then they're going to have to use something that doesn't generate as much in savings. So there's going to be two links below this video. There's going to be the link for this document that you can get, and then there's going to be a link to meet with me one-on-one and review your situation and see how much money we can save you. So take care. Again, hey, maybe like the video, subscribe to the channel. I would appreciate that if you found some value out of this, and feel free to send it to a friend. Take care. Have a good one. Bye.